Namaskar and a very good morning. On behalf of International Institute of Security and Safety Management, I welcome all the distinguished guests, esteemed dignitaries, and respected stakeholders to the 33rd IISSM Global Conclave 2023. IISSM promotes and inculcates professionalism amongst both security practitioners individually and private security agencies in general. It has also been creating all-round security awareness amongst non-security personnel. We organize various kinds of short and long-term training programs, both thematic and customized, in the field of security, safety, fire and loss prevention, and related areas. Our global conclaves bring together security and safety experts from all over the world for experience sharing and updating knowledge of the state-of-the-art technological advancements. Well, the theme of this year's conclave, as we all know, is disaster, climate change, security, business leadership, innovation, and building resilience. The conclave serves as a platform where leaders, innovators, and visionaries converge to explore and strategize solutions to the pressing concerns of disaster management, climate change, and security, all the while embracing the crucial roles that business, leadership, and innovation play in building resilience. As yesterday, today too, we are honored to have with us a distinguished lineup of speakers who are pioneers in their respective fields, bringing a wealth of experience and expertise to share with us all. As we delve deeper into the discussions on business leadership, innovation, and building resilience, let us remember that the decisions we make today will shape the world of tomorrow. So let's set the ball rolling. We have already the chair of our first session here with us, raring to go, disaster risk financing and building financial resilience. That's the topic, and he'll be chairing this session. He's none other than Mr. Raj Lakha, with 25 years of experience in safety, security, business continuity, and disaster management worldwide. He is chairing this session. He has co-authored many books, written many articles in the peer journals and all, and we welcome him to chair this session. Welcome, sir. And we also have in this panel Mr. Vineet Nanda. He's a mechanical engineer from Delhi College of Engineering. He's from SIFT Capital, or SIFT Capital, as you may call it. He had a very successful stint with Citibank in corporate banking in Mumbai and Delhi, across multiple assignments in operations, transaction banking, product management, and sales and relationship management, before venturing out as an entrepreneur. The wealth management business, SIFT Capital, was started in 2009 based on the need analysis of a gap in professional advisory services in India. And in a short span, his firm has garnered assets of more than 2,000 crores in mutual fund space and has been one of the fastest growing MFTs in India. Can we have Mr. Vineet Nanda on the stage, please? We will also be joined by Mr. Ankur Gupta. He is an insurance professional with experience across reinsurance, primary insurance, and distribution in varied roles, ranging from business development, product development, channel management, international business, and he has a flair for setting up new businesses, putting together products and processes to create a robust business stream. Mr. Ankur Gupta to join us, please. Is Mr. Johnny Ruangmei joining us? Online?
Yeah, he's here.
He's here, okay. Mr. Johnny Ruangmei, please. please join us on the stage. He is also one of our panelists. Trained on disaster risk reduction, organized by Technical Cooperation Directorate, Ministry of Foreign Affairs, Tangolin, Singapore, and trained on GIS and remote sensing in disaster risk management in in-depth research services. He's Global Ambassador of International Young Leaders Assembly, organized by Global Peace Foundation, trained on disaster risk management by TORAID in Melbourne, Australia, and pleasure that you also have joined us today. So I now hand over the panel to our chair, Mr. Raj Lakha, please.
Thank you very much, ma'am. Very good morning, ladies and gentlemen. It's an absolute pleasure to see you all. I thank Mr. R.K. Sinha for inviting me. And we have a brilliant audience. And let me begin by setting out the terms of reference for our plenary session. It's a unique session, and it's one which hopefully will grow year on year. It's about the link between disaster risk financing and money. The link is so important because without money, we cannot prevent disasters, and when disasters do happen, we need money to reduce the impact. So the sheer importance of the marriage between disaster management and finance, and I'm very lucky to have three outstanding co-panelists with me, and hopefully this will be an interactive session. What I would like to do first of all is begin by setting the terms of reference for our session. I will then invite each of the panelists to present their paper, and I will also ask the audience to ask any questions. So I hope someone will have a mic ready as the audience participates. So in terms of our terms of reference, there are 4 questions that I would like our panel to address as we go through this session. Number 1, what keeps them awake during the night? What are the main disaster risks that they worry about? We have a renowned expert to my on my right in public sector disaster risk management, and to my left we have 2 eminent individuals in private disaster risk management. So what keeps them awake in terms of the main disaster risks? The second question, in terms of proactive disaster risk financing. So before disasters strike, what is their advice to us in terms of having the resources needed to prevent those disasters? The third question is reactive disaster risk financing. So once the disaster strikes, what kind of resources are required to get the business continuity operational? And the fourth issue that I would like my colleagues to address is the interplay between banking, accountancy, finance, wealth management, and disaster management. Because, as I said at the very beginning, the link is there, the link will grow, it will become more important, and maybe next year or the year after, why not have a dedicated conference to the relationship between the two? So, given our time is limited, I would like to invite Johnny Ruangmei to my right to present his paper. I will then ask members of the audience to ask Johnny any questions, and then we'll move to our other colleagues. Johnny has a remarkable career. He is a pioneer in disaster risk financing from the public sector. He has developed a disaster risk financing program for the Disaster Management Authority, so it'd be fascinating to hear from him. And he's also highly educated. I was looking at his CV and I was so impressed that Johnny, he's studied in Hawaii, Singapore, USA, with NASA. He chooses all the best places for the education. So well done, Johnny. So over to you.
Good morning. Thank you, Raj Lakha, for the introduction. the 4 questions that he has posed before us certainly would enthrall us during this short discussion together here. Before I begin, I would like to start that the Nagaland State Disaster Management Authority, Nagaland is a very small state, but we are trying to make that small state a very significant state for the country in India. We began the disaster risk financing solution with the support from the International INSU Resilience Solution Fund from Frankfurt Institute of Financial Management, that is partly funded by the KfW, and we were also worked with during this journey with Swiss Re and the Tata AIZ, and we have been doing that policies for the past 3 years, and this year with the little experiences that we have gained as we entered, we do not know anything about the market of disaster risk financing or parametrics weather solutions. I would be sharing the little experiences that we had gained through our solutions program for risk financing, and I would like to also dwell a little bit on how
Is this?
No, that's not mine. Okay, while we are waiting for my short slide to be, yes. So I begin, I would like to start with the lens. Quite many public policy makers, when they look at risk financing or disaster risk financing, they look this program like life insurance. I would like to bring forth here the perspective for us to understand. Disaster risk financing cannot be like life insurance. Because if you really look at in the life insurance, the insurer is getting the premium paid, but the insured, if nothing happens to him or to her, that benefit of insurance did not or will not come back. Disaster risk financing should be the sustained, evolving financial solutions, a risk pool. If that concept of sustained, evolving financial solution is not included in the disaster risk financing, then we will not have the sustainability. For example, the government will put forth the bucket of resources. But if that bucket of resources exhausts every year, then it is not a win-win situation. Therefore, we need to bring in the win-win situation perspective. The little experiences that we got through our parametrics weather solutions program, which we have been implementing for the past 3 years, is that we need to understand between a premium versus sum insured, which is very important. The second pillar that we need to really understand is the threshold and the trigger. If the threshold and the trigger is not worked out in a practical manner, our disaster risk financing solutions will not become a solution, but it will become a resource drain. Another important point that we need to understand when we talk about disaster risk financing or building a financial resilience in the context of disaster risk reduction is we need to also understand the grid precision and the real-time data source. real-time data source, when I say, you know, the background would be the satellite data source, but that may not be a realistic one on the ground. So that is one that we need to understand. The influence or the guidance and the practical steps, what I would like to put forth here, especially for the public policymakers who are present here in the room, is we need to understand before we begin this disaster risk solution or financing, we need to understand the product or the solution type. What is the product or the solution type that we are looking at it? Then we need to look at the premium risk relationship. If I'm insuring for a breach that will never fall, then the premium is a waste. Therefore, we need to understand the premium and the risk solutions. Another point that we need to look at it is the coverage period. Therefore, this year we are looking at multi-year for 3 years. We are not looking at 1 year, 2 years, but we are looking at multi-year for 3 years. So these are the influence that we need to really understand. When we talk about disaster risk financing, it has to become, or when we talk about building financial resilience, we have to understand that it must become a mutual beneficial legacy for insured and the insurer. If this link is missing, I do not think that any government entity would put their resources into something where it will just go away. So these are the few thoughts that I would like to share with the little experiences that we have in the country, because Nagaland, though small, but being the first of the state to undertake this. Now when the Raj was saying about what keeps us awake when it comes to DRR, is this. In the context of Nagaland, we are in a very fragile ecosystems in the Himalayas. With a small change in the climate patterns, it can change the entire economy of the regions. Now when we really look at that, do we have a financial resources for, we call it inclusive, leaving no one behind, build back better. That is one area that keeps us always awake. What disaster risk financing that we are looking at it, though this disaster risk financing or risk transfer has been talked in many of the international forums, but I think many of the public entities have not really got into it. Therefore, this is one area that we are looking at it, that this would become a source of finance for Build Back Better. Disaster resources to build business continuity, same thing. In the context of Nagaland in the year 2018, many bridges were fallen because of the extreme weather events. Now our economic loss was nearly 800 crores for that period of 3 months. Now we do not have that 100 crores to build back. Therefore, when we have this disaster risk financing or financial resilience building, we will be able to enable the business continuity in the case of any extreme weather events. What is the banking linkages? When we talk about the banking linkages, I think this is high time that we need to really look at. We are not looking at the catastrophic bond that many other countries are doing, but maybe perhaps India is a continent. It's a big, giant country in the world. Maybe perhaps we need to bring forth the risk pooled resources, not exactly in the pattern of the catastrophic bond that many countries are doing, but I think we would be the leader to bring forth that innovative idea of bringing in a risk pool, and that risk pool would be a fountain for Build Back Better, bringing in linkages of all the big financial institutions available in the country and the government, and we will be able to work together, leaving no one behind. Thank you so very much, Raj Lakha, for your time, and to the IISSM, thank you for having us, and God bless. Thank you.
Thank you very much. Outstanding. Thank you very much, Johnny. Is there any questions from the audience for Johnny? Any quick questions?
We can take it later.
Now is your opportunity before I move on. No. Okay, so next speaker is my colleague here, Mr. Ankur Gupta, who is also a very accomplished person in disaster risk financing. So over to you, Ankur.
Thank you, Raj, and thank you, Johnny, for doing the initial setup for insurance and reinsurance. So, Johnny has already covered how insurance and reinsurance can come together to work towards disaster risk financing. But if I can just take a step back and talk about how we have been evolving and how we are seeing disaster risk financing globally. So I'm part of Munich Re, which is world's largest reinsurer. And if I look at our experience in disaster risk financing, we are in this business for over 100 years. We are there supporting countries like Japan in their earthquake or a hurricane in US, be it a typhoon in Philippines or a cyclone in India. We are always part of the disaster risk financing solution, be it directly with the government or with the private entities. So irrespective of the size and magnitude, somewhere disaster risk financing is both a topic of pre-disaster activity or the ex-ante as we call it, and post-disaster activity. Largely as an insurer and reinsurer, we come into picture pre-disaster, but we play a very important role post-disaster because what we do pre-disaster really helps in setting the tone for the post-disaster activities. If we look at India specifically, the number of catastrophic events is increasing year on year. The trend that we see over a period of time, the increasing trend of cyclones on the west coast of India. Earlier we used to see a lot of cyclonic activity on the east coast, which is also increasing. But the trend of increasing cyclones coming on the west coast, which is much more industrialized, much more densely populated as compared to the east coast, is also a kind of a, I would say, worrying factor that we are seeing. It is not only going to increase the exposure and losses to the economy, it is actually putting life into danger. So there is a lot of action and activity which is required on that side. We are seeing a climate change impact on the flooding activity. The areas which never saw floods have started to see floods suddenly, a flash flood or a very high rainfall in a single day. Those are causing real damage to the economy and the individuals. The recent Gulf event that we saw in Sikkim or the cyclone in Chennai, not only it is not only the event, it is also the way we have created our infrastructure, which is not necessarily a very high disaster resilient infrastructure. This is also an area which is of, I would say, where a significant focus is required, because we need to create infrastructure which can last another 50 or 100 years. Then only as an economy, as a country, we will continue to grow at a pace that is desired to be there. So in this regard, I would say various entities have come together, both on the private sector side as well as the government side. The entities like NDMAs who are providing the entire, I would say, the policy framework. The regulator of insurance industry who has created a kind of policies which are pushing insurers to come out with new solutions. Insurers and reinsurance companies are coming out with product solutions which can start reducing the protection gap. And this is where the focus should be. Today, if I look at and compare ourselves with the developed economy, where if an event happens, the protection gap is not more than, the insured losses are close to 50% or above. Whereas when we look at Indian scenario, the protection gap is significant. In our studies that we have done year on year, insured losses are less than 5% or somewhere close to 2 to 3% on a larger scale. So a Chennai flood or a Kochi flood or let's say recently the Tamil Nadu cyclone, the economic losses are significant, but the insured losses are not as big as the economic losses. And the reason is simple: the adoption of or the awareness of disaster risk financing or managing your exposure through various tools available to you is limited. And this is where the investment from the government, from the insurance companies is going towards, to create that awareness, to create that platform. Now, specifically if I talk about the 4 questions that you raised, what is keeping us awake? I would say we are in the business of volatility. We are in the business of managing this disasters. So that is not a worrying factor. The worrying factor is the changing trend, the climate change, which is making it far more unpredictable, far more, I would say, frequent, which is what is making it a difficult topic to manage, because one is managing the disaster, one is also creating sufficient funds, putting sufficient capital behind it to manage those disasters, and this is where now a much larger investment has to go in. So it is the increasing frequency, it is the changing trend, and the climate change or the global warming, which is resulting into a much higher scale of disaster. That is what I would say, as an insurance industry, as a reinsurer, we are worried about, and we are keeping track. Our own prediction for India, when we are doing kind of a climate change prediction, we believe that the frequency of cyclones on the western coast is going to go up much more significantly. The warming will result into a bit more, let's say, increase in the sea level on the coastal areas. Not immediately, 50 years down the line, but we have to start preparing for that now itself. The other part was around pre-disaster activities or post-disaster activities. As I started, insurance or reinsurance, or for that matter, the preparation for disaster management has to happen much earlier when the disaster strikes. We cannot wait for collecting funds when the disaster has happened, because that would not only delay the rehabilitation, it will actually push the economy 10 years behind. So we have to be prepared much earlier, and government has done a commendable job in terms of saving lives. Now we hear a lot less loss of lives or as compared to earlier. So that is a very, very positive move. What we need to also work towards is how do we also reduce the economic loss by preparing disaster resilient infrastructure. Secondly, of course there would be certain losses, but how fast we can help and rehabilitate. That can be done with the help of let's say, interaction of insurance, reinsurance, and the capital market tools for disaster risk financing. Thank you.
Thank you very much, Ankur. That was excellent presentation. Much appreciated. Any quick questions for Ankur? Any questions for him from the audience? We want it to be interactive.
Okay,
Because we can't...
I would throw a question from here.
Please.
That for insurer, paying that money is a bad investment if nothing happens. Okay, and in our country, what we see that the risk mitigation and the risk bearing capability is always thought on the government side, right? The nation bears the cost. But there are large number of wealth and the property which are lying across the country, like the telecom infrastructure, which belongs to the private companies and all that. Do they come to get insured? And if they, I mean, how do you think that this gap, there is a gap, I believe, there is a gap. How do you suggest a financial model or a risk governance model so that these risks are, I mean, that the losses are covered by the corporates? Thank you.
Maybe I can start. So if I look at, I can clearly divide it into like 2 or 3 segments. The corporate citizens or the corporates out there, they are very well aware of the insurance solutions or the risk management solutions. In fact, they have departments, large corporates have a risk management departments out there, which is not only talking about, say, natural disasters, they're also talking about the emerging threats of cyber and all those things. So they are very well aware, and they are utilizing the insurance solutions out there. They are going out, not just relying on what is available in India, they are going and seeking the best available in the world, and that is where people like us, in terms of Munich Re's and other insurers, come into picture, where we bring in the global knowledge pool and share the best practices out there. Then if I look at the individuals, and within individuals I am talking about the people who have, let's say, access to resources. There is an improved or increasing awareness about insurance and the availability of insurance. So home insurances or insurance for motor or your health insurance, which has picked up significantly last few years. Post-COVID, there is a significant awareness around insurances. So that is on an increasing trend, but has it reached a level which I would say is satisfactory? I would say we still have a long way to go. But the biggest problem or biggest challenge is among the people who have limited access to resources. These are the people who are working on daily wages, these are the people who are working in the unorganized sector or have a livelihood challenge. Any event will throw their livelihood into a kind of a challenging situation. This is where the role of the government or the role of the government institutions come into picture, because these people, even though if they are aware, may not have the resources to buy insurance individually. So it is better that there is a mechanism, there is a way to get some agencies together and put a solution. Solutions are available. It is now about how do we deliver and take it to the final level. So government has done again a very good job in putting schemes like Prime Minister Fasal Bima Yojana, which is now giving a pool to the farmers. They started life insurance, the Jeevan Suraksha Bima Yojana. Then they have accident insurance.
Ayushman Bharat. Ayushman Bharat is also.
Ayushman Bharat, yeah. So all those schemes, they are there. Livelihood protection is still a challenge. I think that we will move there.
Thank you very much, Ankur, for that excellent summary. I now ask our final panelist, Mr. Vineet Nanda, who has a remarkable history as a wealth manager, as an investment banker, so he brings a unique perspective to our discussion. So, Vineet, over to you.
So I think climate change is a reality that we cannot wish away. I think the only good part is that technology is helping us in at least creating predictability, at least around some of the oncoming disasters which happen. And as Ankur mentioned, that to some extent at least mitigation of loss of lives is something which has started to happen. But the reality is that as we move ahead over the next few decades, the frequency, the intensity, and probably in some cases also the unpredictability element will also kind of go up. Now, most of the discussion that we've had till now has been around insurance and in terms of how do we cover risks. But I think the few other important elements which also I'd like to highlight is that as Ankur mentioned, I think there is a big knowledge gap that we have in the country, wherein corporates are still more proactive around insurance and disaster risk management and proactiveness. But I think at an individual level, the penetration levels in India are still quite low. Also, I think the knowledge level has to be localized, because the risks which are there in different parts of country arise from different events. So, for example, the coastal areas are prone to cyclones. We have hilly areas, which are prone to earthquakes, and to that extent, therefore, to some extent, the education is required at a state level for people to be able to understand the kind of potential risks that can happen, and therefore, how do they protect, their physical assets, and how do they ensure that, their business or their living standards kind of continue even post any disaster happening, and not being purely dependent on government aid to come to the rescue. The second aspect is also in terms of financial planning at the level of both individuals and corporates, to have liquidity to be able to manage these events. Because whether it is government aid or whether it is any insurance payouts, there is a process to it, there is a time horizon to it. And since many people do not opt for insurance at the personal level, I think Ankur mentioned penetration levels are barely 5%. To that extent, therefore, it's important also that how do you manage your self-resources also in an efficient manner, and hence financial planning in today's day and age is not a question of choice, it's a compulsion. And fortunately, with the Jan Dhan bank accounts, Today, fortunately, everyone has access to not only a bank account, everyone has access to structured, safer financial investment options, which are going to be very useful to them to have liquidity available should an event happen. So I think the importance and also this to some extent answers the proactive and the reactive kind of scenario, because when we talk about insurance, it's more reactive. I think the proactive steps are that how do you manage the fear and greed syndrome to ensure that your liquidity is efficiently invested, creating returns from you. To some extent, also it delinks your assets between physical assets and financial assets. And therefore, one of the trends that we have seen over the last many years is that a lot of people who are entrepreneurs also are allocating a significant amount of money to financial assets, also as a mitigate against having all eggs in one basket in terms of everything in business, and also ensuring that from a future perspective they are able to diversify their assets across multiple asset classes. And most importantly, liquidity is a very important aspect which is available from financial assets. And I think even when COVID struck, which was also in a way a natural disaster, probably only place where people had liquidity was for financial assets. So I think the awareness around creating a pool of money which is dealing from physical assets and business is increasing, and I think that is one structural trend which will to some extent help in the future to mitigate some of the impact which such disasters may bring upon.
Thank you very much, Vineet. It is unique to have someone of his background at a disaster management event, because as a wealth manager, as he is, to bring that insight is invaluable to us. So I now open up the discussion to the audience, and please do ask questions, because this is not just us sitting here and you sitting there. We want to hear from you. You've got three outstanding contributors: wealth manager, insurer, and public sector finance specialist. So can you, any questions from the audience?
We all know that individual household or family resilience is the one of the key. And insurance will definitely have a role building the family resilience towards the disaster risk management as well as the coming climate change challenge. How a comprehensive package, because these insurance offers are different, I have to choose 1, 2, 3, 4. Is there any idea of comprehensive package to the family, so that it's cover all around the risk to the family? Thank you.
Thank you.
Because the risks are so varied, it is important to understand that you will get the best solution if you pick up a risk and accordingly take a solution. However, there are comprehensive solutions available, and in fact, the regulator has recently worked on a product called Bima Vistar, which is, by the name suggests that they want to expand the insurance penetration, which is a combination of a life, health, and home insurance, or property insurance. It's a combination which will be marketed in village and rural areas, and of course other tier 2 and tier 3 cities. The idea is to give a single package to give a comprehensive protection. So yes, it is available. Even today, most of the insurers or most of the, let's say, the wealth managers or they anyway provide you a comprehensive solution by clubbing various solutions or various products from other various service providers. So it is available. Does it make or will it be the best solution? That is for individual to evaluate. But yes, the solutions are available in the market.
So please.
Health insurance. Health insurance, your previous health history determines also part of your premium. In disaster insurance, risk insurance, does the location where you stay will it affect? Because if I stay in Chennai, you might say, it's frequent floods, so your premium is high, while if I stay in somewhere in central India, it cannot. That is one. And the second thing is, in health insurance, you have got certain conditions in which the insurance would not apply. But in disaster, you can't say that. I mean, I may have a cyclone and it may not be the water which got me, but my building collapsed due to something else, the wind. So would then the insurer say, sorry, you were covered for the flood, but not for your building falling down? How do you tackle this? These are the two questions.
Ankur probably will throw greater light, but just to let you know, even health insurance costs are lower for smaller cities compared to the metros. Because at the end of the day, the premiums are linked to the risk perception from an insurer perspective. So if they believe that their payout is going to be more, the premium goes up automatically. So rest, I think he'll throw more details.
I think as a user, Johnny would be able to throw a bit more light, but as an insurer or as a reinsurer, yes, the location does play a factor, but there are two types of insurance on disaster risk financing. Type 1 is indemnity based, where we are basically going and checking what is the actual damage, and one is parametric. So parametric is actually purely about that location, that what is the probability of this location getting impacted by say earthquake, cyclone or a flood or any such thing, and basis historical events and our own prediction for the future, the probability of the event will decide the price. So yes, the location plays a significant factor. Even in indemnity, the basic matrix is what is the chance of an event in that area. So while on a home insurance side it is standardized and not too significant variations is there, because if you look at India as like overexposure, the good locations subsidizes the, let's say, the more exposed locations, so it doesn't impact too much. But yes, there is a factor of location. Now also talking about conditions, so broadly, see, I mean, it has been, people feel that insurance companies do take premium but don't pay claim, but that is not the reality, and we have seen in COVID, I mean, the industry paid almost 35,000 crore in claims. So it's not the factor. What you are rightly that there would be certain conditions, boundary lines, but that is where what you want to buy is critical. So you can get a product which will cover everything and it will have a price accordingly. You can buy a product which is very specific, saying only cyclone, and the price would be accordingly. So it is about how you as a buyer are looking to take it. But considering our larger population, which is not as well versed in the, let's say, financial understanding or insurance understanding, what we generally propose is keep it very simple, cover everything. Cover everything, keep the triggers very simple, keep the parameters very simple, keep the conditions simple, so that at the time of claim nobody has to think what was covered and what was not covered. Of course, it makes certain things costlier, but then you balance out with coverages, let's say, values and everything. But we like to offer simple things.
Thank you, Ankur. Any further questions from anyone from the back would like to ask any questions? In that case, I have two questions. One for Johnny here, because he has been a pioneer, as I was saying earlier, in disaster risk financing for Nagaland. My question to you, Johnny, is what about the other states in the northeast and other states across India? Are they learning from your experience? How are you sharing best practice and sharing knowledge?
Thank you, Raj. As I said, we were also a novice in this initiative. Now, many other states are looking at it. I believe Assam Disaster Management Authority is already on the way, and they will be doing it. Sikkim is also looking at it. And in the Northeast region, we are looking at bringing the perspective of risk pool together. Sir Krishnavas, the Honorable Member of NSDMA, is here. He is one of the lead in that initiative, and we are looking at more states coming in. Now for the Northeast region, instead of Nagaland walking alone, we are looking at all the 7, 8 sisters work together. That's what we are looking at it. So there are a lot of other states coming in. As I said, this year, We hope that Munich Re would be able to come and work together in this initiative, and we are designing solutions as our honored guest has asked, the win-win situations where we will have a proper trigger and threshold very realistically set. And sir, to your questions, in fact, the parametric solutions is much more inclusive than any other solutions when it comes to disaster risk financing.
Thank you very much, Johnny, for that sharing that experience. We only have now, ladies and gentlemen, 2 or 3 minutes because I've been asked that we need to finish promptly. So I thank all 3 panelists, and if I may just draw some conclusions from what they have said. The first most important conclusion is knowledge sharing. And we as IISSM and the accountancy profession, the banking profession, and the wealth management profession, as Vineet is representing, it's so important that we all come together to create a certificated program on disaster risk financing. This is number 1 from what the panelists have said. The second conclusion is in terms of innovative disaster risk financing. We've heard about insurance, we've heard about state-level solutions, we've heard about different asset classes. So the need for a variety of funding solutions for hotels like this, and as we heard from Mr. Bhatt yesterday, at national level with global warming. So it's not just a case of governments putting money in, but the banks, the private equity houses, the wealth managers, also creating new financial products that can be offered to the market. The third inference that I would draw, although it wasn't touched upon today, but I need to mention this, because Mr. Sinha is not just a champion of safety and security, he is also a champion of farming. And he has been pushing millet, which is a grain. And when he mentioned millet to me some time ago, I was a bit confused. What is the relevance of millet to what we do? But it is very relevant, because if we look at global warming and we look at erosion, we look at the impact of global warming in the Himalayas to what it's affecting, how it's affecting us today, sustainable farming is a key to ensuring that crops grow properly and the ecosystem is balanced. So sustainable food production using grains like millet and other grains is going to be important. So we thank you all for giving us this opportunity, to our 3 brilliant panelists, and to IISSM for this opportunity. And thank you very much indeed.
Well, our learned panel of financial experts explored strategies to manage the economic impact of disasters. I request you to please be with us for a few more minutes. They deliberated on the innovative financial mechanisms, strategies, policies, solutions aimed at enhancing resilience to natural and man-made disasters, ensuring timely response and recovery. And one of the inferences was that at individual level, we need to create more awareness, so much needs to be done, and we thank them for their valuable suggestions.